With that, I would like to thank you for taking our time speaking to us on NewsX World. Meanwhile, viewers, more news coming in. Now, we're learning that Chief Economic Advisor V. Anantha Nageswaran has now stated that US President Donald Trump's 50% tariffs on Indian imports could slash India's GDP growth by up to 0.5% this year. Speaking in an interview, Nageswaran has stated that the tariff impact could range between 0.5% to 0.6% depending on its duration. While US-India trade totaled $129 billion in 2024, India's Finance Minister Nirmala Sitharaman emphasized that India would continue importing Russian oil, citing its cost-effectiveness despite the tariffs. Now, exporters warn that the move could affect over half of India's merchandise exports to the United States, potentially benefiting competitors like Vietnam and China. However, Nageswaran remains confident in India's growth forecast of 6.3% to 6.8% for the fiscal year. This, of course, bolstered by a strong 7.8% expansion in the April to June quarter. With us on the broadcast is Dr. Jayant Menon, Senior Fellow at ISEAS, the Yusof Ishak Institute, joining us from Singapore. Thank you so much for taking our time speaking to us on NewsX World. Interesting estimate put forth by the Chief Economic Advisor. We have seen a rather robust GDP growth rate figure put out by the Government of India just a couple of days back regarding its first quarter status. The growth rate was registered at 7.8%. But in the meantime, we do know that tariff troubles are looming as far as Donald Trump is concerned. India is attempting to diversify its exports as well, looking at alternative markets in order to reroute whatever is manufactured. What, in your assessment, would be the impact on the Indian economy in the short term and in the long term?
Right. I think the first point to make is that, the US is India's most important export market at almost 18% last year. So it's almost double its second most important, which is the Arab Emirates. So it's very significant. And a massive tariff such as this, 50%, will have an impact, especially in the short run, before you can try and diversify. It's, of course, difficult to put a number on it, but, if the estimate is about 0.5 percentage point of GDP growth, that seems reasonable. I guess a lot will depend on the accommodating policy measures at home. The major driver of growth is consumption. India's trade to GDP ratio is only about 50%. It's not a highly open economy, but nevertheless, it's going to be an important factor.
Indeed, and we've also been seeing a lot of people talk about the pharmaceutical sector at large. We do know that US procures about 40% of its drugs from India. Where do you think the India-US equation as far as trade in pharmaceuticals is concerned will head next?
Right. So I think pharmaceuticals are currently exempt, so that's a good thing so far. We don't know how long these things will last with this administration, which is highly erratic. We've already seen how sectoral tariffs have come into play with a lot of the metals. Pharmaceuticals could be, in the firing line. But I think, hopefully common sense will prevail. These tariffs will mostly and firstly hurt the US economy and US consumers. And that's something I think that will become evident very soon. We've already seen the latest producer price index numbers jump up higher than in 3 years in the last month. So the signs of the impacts of these tariffs are already feeding through. We've seen a sort of weakening in the labor market. So stagflation is a risk. So with these sorts of indicators emerging, I think, hopefully the Trump administration will see the sense in, if not reversing course on tariffs, on at least not imposing any new tariffs.
All right, sir. With that, I would like to thank you for taking out time joining us on NewsX World, sharing your insight into what we can expect as far as